Crypto markets remain in free fall as risk sentiment plummets and stocks hit 6-month lows. Trump signals tolerance for near-term pain as talk of retaliatory tariffs ramps up from all sides. And crypto vol and skew sees further demand as the Crypto White House Summit disappointed the bulls and triggered another wave of de-risking across assets. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran from Options Insight. Got my man Dave from FOMC. How's it going, man?
Yeah, good. Yeah.
These crypto markets, man.
Yeah, man, it's non-stop at the moment, isn't it? It's
very choppy. Very, very choppy. I mean, we hit 76.
Choppy, I'd say one way.
No, but we hit 76k-ish last night.
Yeah.
Like 1 a.m, and then we're back up at 81 before you know it. It's pretty mad.
Yeah. I think like we discussed it last week. Like we're seeing this continuation of like this levered momentum trade unwinding and de-risking.
Yeah, it's happening in equities, right?
Yeah.
Tesla was down 15% yesterday.
Yeah, but I kind of think, and maybe this is like one of the impacts of Bitcoin particularly becoming more institutionalized. I think Bitcoin was part of that momentum trade, right?
Mm-hmm.
So, you had coming into this year, the Trump trades were long dollar, short bonds, long Bitcoin, long NASDAQ. Obviously been taken out to the woodshed and getting shot, right? So now as the momentum trades and these momentum trades like very like model CTA driven trades get levered up very quickly. So then like the deleveraging on them is sharp and it's nasty, and then everything what I call grosses down risk. You take all risk positions down, and that's what we're seeing, right? And then on top of that, so last week you had the news around Germany leading this push for like this massive fiscal sort of spend on military spend, which they're talking around numbers around like essentially be like $1 trillion worth of military spend.
Yeah, it's huge.
So you had a massive sell-off in European bonds, particularly German bonds. I think it's like one of the biggest moves since,
because they're removing their debt brake or something.
Yeah,
right?
yeah, and they're basically saying, right, let's basically all these
the fear of inflation that they've had for decades, right?
and like deficits and stuff. It's like, right, we kind of let those go now because we all need to spend on defense. So you had a big sell-off across bond markets, and particularly
biggest jump since the 90s, biggest one-day jump in bond yield since the 90s.
Yeah, it's huge, jumped like 30 bips in a day, massive move. And again, that creates this like what we call VAR shock, this value at risk shock. And again, when you have all your risk models, as you all know, when you have all these risk models, the limits and the risk limits you can take are subject to like these vol adjusted risk limits.
Yes, vol control.
Yeah. So all positions have to get taken down. You just have to have less like risk on. Even positions you have to take down. And so this is what we've seen. So I think you already had this momentum trade unwinding, largely actually because of the dollar selling off and bonds rallying. And then that started to blow up all the other trades, and then NASDAQ and everything come down. And then you've had this bar shock in the European bond markets. So basically, you're just seeing this big like de-risking everywhere. That's just kind of hitting all assets. There's not
the dollar move is super interesting, right? Because normally when you get a VAR shock, the dollar's going up and it's being a bit of a wrecking ball, right? But in this case, you're getting a capital outflow out of the US assets into things like China, things like Europe, right? And the dollar's getting killed. But isn't that medium term financial like easing essentially, right? Financial condition easing, isn't that going to be good for risk assets in the long term? Yeah,
exactly. Well, this is the thing. So like the dollar's selling off, rates are coming lower, and this is why I haven't changed my view like massively. And in fact, coming into this year, my view was the dollar will weaken, and yields will come lower. So we're seeing that play out.
So those things were right. It's just that crypto got killed on the back of it.
Yeah, and it's all part. Like the one thing I will say is with Bitcoin's like barely, I think from the record highs, it's not quite touched 30% correction yet, right? So, but I call it 30%. This is a very, very normal correction in a Bitcoin bull run.
That's right.
So I'm kind of looking at things going, this is all pretty normal. A lot of the noise is actually around like equities and what's going on there. I think obviously outside of Bitcoin, some of the altcoins have been absolutely smashed. But I think part of the issue with the altcoin space is that they've not really participated in this bull market like to the extent they have like in previous runs in a way. So I think the altcoin space has felt like really, really painful. Even again, like even if you look at Solana, what 50 odd % off its highs, all quite normal corrections in a bull market.
But fees have been cratering, right, on Solana since the all the meme coins have been crashing.
Yeah, that was quite a big hit.
Volumes have gone down. Ethereum, same story since Ethereum's peak.
Yeah,
it's just got nowhere near it, right? So the usage of these chains and these ecosystems has dropped substantially, right?
Yeah.
So they need a narrative to pick them up again.
Yeah, they do. Yeah, but and it's interesting. Like we had Tara McCauley on here a few weeks ago when you were on holiday, and she was pointing out part of her bearish thesis was volumes since December of across exchanges and stuff have really fallen. So there were some warning signs.
So the big question is her view playing out now, or is this 72K area, which was kind of like previous peaks, now major support? Is that going to hold?
Yeah.
And this is a massive buy the dip opportunity, or is her thesis playing out and we might go as low as 50K now?
I mean let's see. My kind of view is we probably like I see this market. This is August of last year, and in fact, if you look at what went on, it's very, very similar how this is playing out, right? And this is why I feel quite relaxed as well. So in July last year, so we had this kind of summer where the data was stronger. The Fed kept pushing out when they're going to start the rate cuts, and then the data started to deteriorate, and the dollar and yields and US yields started to come lower from like July time-ish. And in fact, like everything peaked around like mid-July. And then we started to worry about growth. The Fed like maintain like they have a kind of stance, right? And they maintain that until it changes, and then they all just get on board with it. So the Fed was still doing the whole, growth strong, inflation's still too high. There's no need to cut yet, and the market starts pricing these recession risks. Meanwhile, like dollar yen was falling, and dollar yen had a one-way up move, and again you get this levered momentum trade, where dollar yen started to turn. And then all the macro doomers start going, oh, this is the big carry unwind, right? And we dismissed that back then. It's like, no, this is a levered momentum trade blowing up.
And it's happening again.
It's happening again. And then the fear is that the Fed are behind the curve, right? They're not going to cut rates. And then you had that big sort of flush out on the 5th of August. We kind of bounced around a bit, and I think the 9th of August actually marked the ding dong low, and then we kind of went up from there, and then the Fed go and cut 50 bips in September. And I think that similar things playing out. And actually, this sell-off started mid-Feb. We're now like early March, so we kind of around the times when you'd expect it to bottom out. The problem as well this time is that, I mean, I'm surprised how quickly the market started to price this like recession trade or even like stagflation trade, and they're kind of the view is that, well, the Fed are super hawkish and they're not going to cut. But I think that's where the market will be proven wrong, because the Fed will start to see this growth slow down. And they've already said like the labour market softening is a sufficient condition for them to start cutting again.
Feels to me like Trump's playing chicken with Powell, basically, right?
Yeah, quite possibly. Yeah,
and he's like saying, I will bury this economy unless you cut rates, basically, right? And your job is to cut rates to stop that happening, because I've got bigger fish to fry and I've got to rebalance this economy, basically. And he's the stuff he said over the weekend about, short-term pain and being able to tolerate that and stuff. The market woke up to that on Monday. I mean, we had the worst NASDAQ drop since, 2022, I think?
Yeah.
Over 4%. So, and the VIX is back up at 30. I mean, that's major. But it's interesting, though. The VIX, normally when the VIX spikes, it's like it takes a handful of days for it to go from nothing to like massively high, and then it collapses, right?
Yeah.
This has been like a slow stair-step ascent in the VIX over like the last 3 or 4 weeks, where it started at 15 and it's just gradually worked its way up to 30. So it's quite different, and it's making people like me in the vol space wonder and question, is this a regime shift in vol? And we're no longer going to be in that 15 to 20 range in VIX, and now we're in a 20 to 30 range in VIX because Trump's so unpredictable and so much policy uncertainty out there is not about to disappear. Do we live in that world for a while?
Yeah, and there perhaps will be, given his like the headline risk constantly with Trump, there probably will be this maybe a bit more of a risk premium in the market. And again, I something that I think has kind of gone underreported is this story that Trump's setting up to go and meet with Xi in China in April, which kind of for me is a little bit like Trump blinking and saying, right, like we need to sort of talk now. And again, I still feel confident in the view that all of this with tariffs is more about just negotiating and they want to reduce deficits, they want the dollar weaker, and that's kind of what I mean. The whole stuff with Canada, and I mean that's even more. I mean that's about the border and drugs into the country, right?
But they're saying they're going to charge 25% surcharge on like electricity. Right.
Yeah. Yeah.
And Trump's going, we don't need your energy, and it's just a bit of a mess, right?
Yeah, but this is kind of the game, and then like they break everything, and then they all get back together.
You think it's theatrics to some extent?
Yeah, I do. And then what I'd like.
I hope you're right.
But like the macro doomers, as I like to call them, they're very good as well at sticking a narrative around everything. So right now the story is that Trump and Besant, they don't care about stock markets. In fact, what they're trying to do is they're trying to tank everything and tank the economy so that the Fed cut rates.
And yields are lower.
Yields are lower.
They refinance all the debt
at lower things. Now, I kind of have some sympathy with you that I think they do want to rebalance the economy and they're willing to take some economic pain. I think the mistake is that markets are making is to assume that economic pain equals
market pain,
stock market pain. Like the economy is not the market, and this is why I'm kind of like almost want to back up the truck and buy this dip in not just equities.
Yeah, because the weakness in the economy is triggering more liquidity, essentially.
Yeah,
right.
And what we're seeing is we're seeing this move away from the big story last year was this fiscal dominance, right? We're now going to have to get used to a world of higher rates because fiscal's doing the heavy lifting. Now Trump and that have come in and said that wasn't working, like for everyday Americans. We're now going to reduce these deficits, and now it's the onus is on the Fed to do the heavy lifting. And I think we go back into a low rate world. The problem at the moment in that transition is the fact that the Fed are still playing hardball and they're a little bit behind the curve, to be honest, and going, well, we don't need to cut rates yet. But I think quite quickly you see that deterioration, and then where I think people will then be a little bit scratching their heads. We will see the slowdown, but the Fed are cutting rates, and then stocks and everything are back at record highs. And I think
that's what we saw in 2020, right?
Yeah.
2020, biggest recession ever.
Yeah.
It was short and sharp, but stocks went to the moon.
And I got excited actually, 2-3 weeks ago about talking about this macro regime shift, like because we're seeing this dollar and yield breakdown, which is going to be massively positive for risk markets.
There's just a lag on that, though, right?
It's perhaps it's about accepting that sometimes when you go through these macro regime shifts, they come with volatility, and particularly because as the momentum trades of the old regime break down and de-lever, that produces volatile situation where everything gets hit before the new trades are established, and you get new momentum trades established that then start to lever up, and then we go on to new things. But there will definitely be this reflexivity where the weaker dollar, lower yields start to feed into a positive risk story. And then particularly I think triggers it as soon as Powell turns dovish and we start pricing more aggressively rate cuts. I think we should probably be pricing like 50 for May. There's no meeting in April, probably too early for them to do anything in March, but for May. But in a way, so I kind of feel like, look, we've got to ride this out. If July, August, my playbook, we're probably near the end of this sell-off, and we'll probably start to base out here. And but again, where do you catch that falling knife? But I definitely think that point is close, and then we could have quite a sharp move sort of higher. So something
I watched recently, which I found interesting, was Luke Groman's views.
Yeah.
He's a good macro, big picture thinker, and he made the point that, we are used to seeing, when the economy, when growth's slowing down, you tend to see bond yields go down, right? But the austerity that they're doing or trying to do with Doge, etc., there is a risk that they tank tax receipts so badly that deficits actually don't go down and deficits actually go up, right?
Yeah.
And so by them doing this austerity to try and get rates down, it only works to the point where it's credible that deficits are actually going to go down. But if they start to see the impact later down the line that this isn't working to bring deficits down, then actually bond markets get sold, yields go back up again. So they're trying to thread this needle where, you know, what they're doing at the minute is making yields go down, which is their objective. But if they're not careful, it might go the other way.
Yeah.
Right.
The other thing as well, and because a few people have said to me, like my kind of long-term thesis, if you like, for Bitcoin is like this currency debasement story and this idea that high debt fiat economies like can't survive without our artificially low rates and without ever more debt. Right? And unless we find a way to outgrow that debt, unless we have and maybe AI and stuff like changes that in the future, but unless we have some massive productivity growth, growth, that nominal growth starts to outpace the interest and everything else on debt. Otherwise, we're in this like we have to have this artificially low rates, lots of liquidity, and ever increasing debt. And the moment that you try to address that balance, then you start to suffer like big recessions and stuff like that. And then the answer to that will be, well, then the Fed will just print loads of money. Like, so I still, even with what Doge and stuff is doing, it's probably not really going to touch the sides, particularly when social security spending and interest costs are so high. That's actually going to, even if they get yields down a bit from where they were, you know, these levels, they're still going to see the interest costs go higher. And that's what people are arguing, right? They're trying to get them down as quickly as they can.
I think it's a big game theory thing, right? I think they're just saying, look, it's not our fault if the economy tanks. It's what we inherited off Biden.
Yeah.
So we're going to tank it. We're going to kitchen sink it, right? We're going to force the Fed's hand to bring rates down. And then when the market has that lagged response of boosting liquidity on a global scale, you've got the Europeans borrowing like crazy and those stocks going nuts. You've got China now got cover to stimulate, and then you've got rates lower in the US. 6 months forward, we're in boom times again, and it's all because Trump's a hero.
By the way,
right?
a good point as well on China. China announced last week that they're going to target a higher fiscal deficit as well, 4%. So they've been at 3%. That's big the target. They're now going to raise that to 4%. That's like the highest it's been since like 1994 or something.
And that's gone largely unnoticed, right?
Yeah.
No one said anything.
Yeah. So like the bullish narrative for me is we're going into this world of a weaker dollar. I think Fed are going to be cutting rates a lot more aggressively than what's priced. And we're starting to move that way, right? I think we're now 75 bips priced. It was 50 just a couple of weeks ago. Fed are going to be cutting rates. Like the dollar's becoming weaker because of this like relative shift in growth between the US and the rest of the world. China are ramping fiscal. Now Europe are ramping fiscal. That's why I don't see a prolonged bear market for risk generally. I'm like, I think we're in this transition period as we transition from one regime to another, but we're actually setting up for one almighty kind of rip in everything. So permabull and all that maybe, but I just think that's the path. And
yeah, I mean the key to surviving these sort of drawdowns is to not get over levered though, right? Like, you know, you got to know what your risk is. You got to have a long-term view, and you've got to be aware that it might draw down 30 to 50% because that's what crypto does over long cycles, right? I mean, I'd say on the vol side of things, vols have stayed pretty pumped. Realized vol's crazy high still. So you got like Bitcoin at 85, Ethereum at like 100 on realized. Implieds are a little bit lower than that. So actually owning vol is working really well, right? If you're a gamma scalper, you're doing well doing that. Put skews have been pretty well bid. Again, people reaching for protection in the short end. Something that I've flagged to all my subs recently is that long end skew is still in call premium, but they're trying to pull it down a little bit. But if you look, it flips into call premium past June. So from June onwards in Bitcoin, we're still in a call skew. But in Ethereum, you have to go to September to see a call skew. So Ethereum's definitely the weaker one.
Yeah.
But both of them have got about an 8 vol put skew in the front end now. So because we have had very, very violent down moves. I think ETH hit 1750 last night and Bitcoin hits a 76 handle. So these things are correcting hard. There's some major support levels at 72K on Bitcoin, 1500, 1550-ish on ETH. So wouldn't be surprised if those levels get touched. But as long as you're not levered, that's an opportunity.
Yeah,
I think.
Joe, as well. It does, like when I do the comparison to July, August of last year. I remember as well because I bought some Bitcoin like just above 60K, and remember like we couldn't quite break 70K, and then we traded like down to like we was in this 60-70K range, and then started dipping below.
Yeah, then people were calling for it to go at 40K or something.
Yeah, 40 and 45K was the thing, and I kind of compared 70K, like 100K is the new 70K, and then like the 40-45K is the new 70-75K. I think we got down to like 48-49K when we had the like the 5th of August flush, and then that was the lows, and then we never saw that again. I kind of feel that's similar now, because again, it's becoming so. Like everyone's speaking about 70-75K, and Arthur Hayes and all these people talking about that. We got very close last night, but I kind of feel like maybe we don't see that, and then everyone.
But I mean, the election
sat there on the big, and oh shit, I've missed it, and then we just rip.
But the election was the catalyst for the rip in November. What's the catalyst for the rip now? Is it going to be the Fed pivoting and saying, "Yeah, we've got labor markets deteriorating, we're going to need to cut," kind of thing, and accepting that the market pricing of 3.5 cuts is like the minimum that they're going to do, and the market might then price in 4 or 5 cuts, and then away we go.
Yeah, I think that. I think the Fed, once the Fed pivot, and then I just think like the fact that we've had this kind of easing in financial conditions with the dollar and all that, I think that starts to feed in. TGA is still drawing down. That's down like a couple $100 billion since like mid-Feb. So we're starting to see that sort of flow. And then like price becomes narrative, and the momentum generates, and then everyone's and then amidst all of this, no one like the disappointment around the strategic Bitcoin reserve and all this stuff. It's hugely positive. It's hugely positive, and I kind of think that
people just got carried away with what would be announced, right?
But it's massively positive. I mean, like. I still keep getting people say, "Oh, they're not buying anymore, right? They're just kind of keeping what they've confiscated," and like that's not what they said. They're also they will look at ways of budget neutral ways of purchasing more Bitcoin. Now we don't know when they'll be doing that. We don't know how much, but they're going to do it. So that could be a trigger, right? They come out and say, right, we're going to be purchasing this amount of Bitcoin, and this is how we're doing it. And I don't know what that might be. Will they revalue gold and start selling gold? I don't know.
Yeah.
But that could be massive, right? But we've got all this positive stuff that's going on. But we've got a broad market de-risking that's taking everything down with it, and then everyone starts just fitting narratives to that, and but then it all picks up, and then probably in 6 months we'll look back and go, it's obvious actually there's a lot of positive things going on. Of course Bitcoin was going to be a lot higher. That's it.
But it's a super interesting time in markets right now, not just crypto, but all markets, including equities. So who did you catch up with this week then?
Yeah, so I caught up with Wendy O. She's a crypto analyst, influencer, big on socials.
Cool.
Check out what she had to say. I think you'll enjoy it.
Cool.
Hi guys, David here, and joined today by a very special guest, Wendy O, a crypto analyst, KOL, I think they would call you, with a huge following across social media. Wendy, welcome.
Thank you so much for having me. I prefer the term shock jock to AOL, because I'm just a mom on the internet that likes to talk about crypto, kind of my journey and whatnot. But am I a key opinion leader? I have no idea. I just like to talk and to hang out and to get people excited about crypto and Bitcoin.
Yeah, well, look, you've certainly had some phenomenal success in terms of the following you've built, and so yeah, perhaps we start with that. I'd love to hear a little bit about your journey, how you got into crypto, and exactly what you're doing and what you're building in the space.
Yeah, so I heard about Bitcoin back in like 2011. A family member asked to use my credit card to buy Bitcoin on the internet because they wanted to buy computer parts. I was like, no, this in like 2011, 2012, like I think like Facebook was just like the internet just switched from like MySpace to Facebook, and it was like, it wasn't fully what it is today. And I was like, no, that seems like really weird. Like I don't want to get, I don't even think I had a credit card then. And like, if I did, I was kind of concerned that it would get stuck on the dark web. So I knew what Bitcoin was. I knew it was like a currency or kind of, but I just didn't, know enough about it. So fast forward to like 2016, I kept hearing about it on libertarian radio, and then finally end of 2017 is when I decided to buy some. And I just had my daughter, and I was like at this really, I worked in healthcare at this dead end job, and it was it's just started to be super toxic and whatnot. I was in the process of like, quitting to go back to school full time, and with my young baby. So I remember, I called her dad. I was like, I'm going to buy Bitcoin. And he's like, okay, fine, whatever. So I went on Coinbase and I bought Bitcoin, Ethereum, and Litecoin, probably only like $500 or $1,000 worth. I don't remember, but a Bitcoin was like $7,500 back then, and I just was memorized because the number kept going up. And at that time, I was already like, I wanted to like learn about stocks because that's when GoPro was going crazy. I was like, oh well, I have to figure out another form of to get compensation while I'm not working, because I've always had like little side things like eBay businesses and stuff like that, and so I wanted to learn how to trade, and then that's exactly like when I bought Bitcoin. And so I was like, okay, this is cool. Like I can figure out how to make money with this. And then I had a family friend that saw me talking about it on one of my socials, and I wasn't really big on the internet then. And he was like, you have to get on crypto Twitter. I was like, I think Twitter's stupid. He's like, get on crypto Twitter. I was like, fine, whatever. So I did. And then I saw these cartoon characters like making all this crazy money, like posting charts and stuff. And I was like, oh, I could do that. I have a math background because I worked in healthcare. And I have like all these like lower level like math degrees, whatever. So then I taught myself how to trade, and then I started posting content on crypto Twitter at the time. And then I just started to grow a following. And I noticed that there was lots of events because I wanted to network and learn more about crypto and like learn, different strategies, just really get to know people in the industry. And the events were so expensive. I was like, I'm poor. I can't afford this. So then I decided to host my own events. And then I've hosted over 4 dozen meetups, primarily in Los Angeles County, always for free. Some of them we would do trading, different things at OTC desk in San Pedro at the time. And then my following kept growing. And that's how I started the YouTube channel. The YouTube channel started to live stream the crypto meetups. And then I started getting brave enough to cover like charts and showing my work and stuff like that. And then I started getting other opportunities. So the channel kept growing, and I started doing live streaming and interviews and daily news. And then, I was already posting on Instagram then, but then like in 2011, or no, it's not 2011, excuse me, like 2021, maybe 2020, I started getting on TikTok, and crypto TikTok was doing really well. And yeah, I'm just all over the internet now.
Nice, mate. What's the vibe like in LA? I always think a lot. Obviously, you hear a lot about New York and Miami and what's going on there in the crypto scene. What's it like in LA?
So LA's landscape has changed significantly. Like when I was there used to be OTC desks, crypto space in San Pedro. There used to be a lot of meetups in Long Beach. There was always a crypto scene on the west side. And then I would host my events like wherever. So the crypto scene is kind of really spread out because LA is super spread out. Everybody thinks like when we say LA, we really mean LA County, because that's just how it is. But everything is like super spread out. So there's still stuff happening here, but not as much as it used to. Like after the panorama, things kind of like the nightlife and stuff kind of died out over here. But there's still some people. I'm not hosting as many events just because all the venues are super strict with everything. And it's like I need to buy a bar. I need to buy a bar to host my events. But there's still stuff going on over here. I know New York, like it's kind of this. I've been to the New York scene. It's a little bit different. But I feel like I just got back from Eat Denver, and there was a really awesome scene. So I feel like there's a crypto scene everywhere, but it is what you make it. And yeah. So
yeah. Yeah, you'll have to get yourself over to London. There's
I know
stuff going on.
I want to go to London because there's so much. I'm like a big like music fan, like especially rock and punk. So I want to go see like where the Stones lived, and like all of those areas. I'm not a Beatles fan. I am not a Beatles fan, but I want to see I want to see where Marianne Faithfull hung out and Anita Pallenberg hung out, and I want to see like where Coxsparrow is one of my favorite punk rock bands ever, and like I want to see like explore the punk scene over there because I think it's super cool.
Yeah, sure. You should come over. No, it'd be great to have you in London. We should do an event together.
That would be cool. And then we can you can take me on a tour of all the like punk rock stuff because I'm super into music, like the rock stuff. So much fun.
Cool. Awesome. Well, listen, markets, everything's crashing, crypto's crashing, stocks are crashing, X was crashing earlier.
I know.
What are you thinking right here, right now? What's going on? And
I'm not concerned in any way, shape, or form. Like, we've been in the markets for so long. Like, this is just what happens. Like, Bitcoin has we have volatile moves up, we have volatile moves down. I want to say April 2021, we had approximately 50% correction from like 65,000 to about 30,000, and then we pumped again. Each cycle moves a lot differently. So me personally, like, the fact that we have so much, like, we have a pro crypto president in America, like, that's amazing. The fact that we even have that, and people are bearish short term, or it's okay to be bearish short term. It's okay to short the market and make that money, but at the same time, we have like such a bright future ahead of us, and like the SEC is like pro to hearing our voices, and that's amazing. Like, the fact that they're like, hey, we want you to comment, we want you to talk to us, and we're not going to sue you, we're not going to go after you, we're not going to do any of these things. Like, that's pretty freaking cool. Like, I don't understand why people are just throwing fits. But again, it's crypto Twitter. That's what they do. Like, I'm prepared for Bitcoin to go to the 70 to 75,000 that Arthur Hayes predicted. That's like a 30% correction. Like, we might even go lower. The monthly chart looks like trash. I'm doing a lot less trading though, and doing a lot more like longer term swing stuff and longer term holding. And I'm excited to see what the market has to do. And I personally think after Q2 of 2025, we'll start to see the market essentially stabilize. Because again, like, people assumed when Trump came into office, just because he's pro crypto, they expected him to put crypto as a priority. But a lot of people don't understand, like, Americans are in a recession. Like, I know a lot of people are like, no, you're not in a recession by economic textbook terms. I don't care about the textbook terms, because that's not how my people are actually living. So a lot of Americans are having trouble making ends meet to cover like basic necessities, food, shelter, and energy. And those are the numbers they leave out of CPI, and those are the numbers they leave out of the inflation reports. And if people are struggling to make basic ends meet, like, Trump, that's his priority to fix, or attempt to fix it first. So yeah. I think we're going to continue to see a little bit of volatility at the markets, and I'm hoping that's going to subside at the end of Q2 2025. Like, it is what it is. But at the same time, we're really in a good position to see the markets do incredibly well. People just have to be patient, and you have to pick and choose what you decide to put your time and money into. And if you can figure out how to do that, you'll succeed.
Yeah. I mean, the thing that's amazing to me is the kind of consistency we see in these like 4-year cycles. And again, I come to it very much from a macro, and there's a reason why we have these liquidity cycles, these business cycles that tend to play out. But whatever's going on, and obviously with Trump, it's a very different type of presidential cycle. The actual sort of crypto cycles play out quite the same. Like, this doesn't feel unusual at this time post.
Like a 30% drop in Bitcoin. So we had the all-time high of like 109,000, and then we could potentially get that drop, which is looking likely, to like 70 to 75,000. It's like a 30% correction. That's pretty common in crypto.
Yeah, 100%. I think it feels worse because the alt space is being sort of so badly beaten up.
Yeah, I mean, but part of that we can, and again, I'm not blaming meme coins for that. Like, a lot of people want to blame X, Y, and Z on other stuff. But you remember 2020, we had DeFi, we had the food tokens, we had all that stuff that completely popped up. It's very similar to meme coins. And the thing that people don't realize is meme coins are a very important part of crypto. Like, they were always there. Like, way back in the day, meme coins look differently than they do now. And yeah, there was a lot of liquidity or a lot of people are paying attention to that. But the same thing happened too, like on Binance Smart Chain and on Ethereum last cycle. And it's not a bad thing that the meme coins did the stuff that they did, but also, like, we've been, like, most of the people that are in crypto have been here, so it's like, these are a lot of cash grabs, and that's fine. If you want to gamble, you want to have fun, but you know the game. Like, take your profit, sell ethically, have fun, but
yeah. Do you think it's the whole meme coin sort of frenzy that we saw? Is that what's kind of held like I guess the kind of utility tokens and alts back from performing in this cycle?
It could have been, but also too, like, because I create content. I've got over 1 million followers on YouTube, Twitter, Facebook, Instagram, and TikTok. And really, Instagram, Facebook, and TikTok are more like real retail, like the big majority retail. Like, we do have lots of retail on YouTube and Twitter, but Twitter's the most well-versed as far as crypto goes, then YouTube, and then those 3 other platforms. A lot of people, like, I'm still getting views, but it's not the retail friendly we saw last cycle. Like, I got like 200,000 followers in like a year on TikTok. I'm not seeing that happen now. And yes, I understand algorithms and platforms change, but we're not seeing a lot of the excitement that we saw last cycle. And you look at the market cap. I mean, we hit like what, a $3.5 trillion market cap or something like that. I still really feel like we have a lot more to grow, but it's just this cycle is a lot different than last cycle. I think the biggest issue is most people don't understand how to pivot because we get so set in our ways, and that's where it can get a little bit dangerous. Is doing that. That's where you can miss out.
Yeah, it definitely feels like this cycle's been dominated by the kind of institutional narrative and maybe some of those institutional flows. Like, why do you think that retail's not been so involved in this cycle?
I think because a lot of people got burned last cycle, and also too the way the United States economy is. Again, I grew up, lower middle class, and I try to explain to to the people that don't necessarily understand that, like, people that grew up poor or lower middle class or even middle class, we're just trying to make ends meet. Like, we're just trying to put food on the table. People are trying to take care of their kids. They're trying to make sure, like in California, we're just trying to make, like, we just had a bunch of fires. Like, I'm just speaking for Americans. Like, we have more important things than to pay attention to crypto. Like, investing in Bitcoin and crypto and meme coins and all that stuff, it's fun, but it's really not, it's not for people that are trying to make ends meet, because people have to feed their families and, like, those types, that type of stuff. So and plus too, there is a lot of institutional adoption, and that could, even though it's against Bitcoin's ethos, it could be good long term. But at the same time, you come from traditional markets, and you know that the TradFi operates differently than retail investors. You guys take profits. You guys have quarterly reports. You guys have to plan for taxes. You guys have shareholders. You guys have all these other factors that go into your trading and investing strategy. You guys use different types of algorithms. Like, I work with a traditional financial firm, Dame, and they basically create custom Bitcoin, crypto, 401ks, IRAs, like American traditional financial products for their clients. They're licensed and regulated to do it, but we talk like every once in a while, and he's like, yeah, like, part of the reason why the market's dropping is a lot of investor guys were so up on their Bitcoin spot ETF positions that there's an arbitrage opportunity to get into futures. So they're selling to take profit, and that's impacting the market. So there's all these little things that are happening behind the scenes that that you could probably explain better than I can, but it's just a dip.
I mean, like, I have a very long-term view on the space, and my general kind of investing style, I guess, is more sort of medium long-term. I do actually think, like, what we're seeing here right now is we're seeing actually an unwind of, like, a levered momentum trade. Like, a lot of these popular Trump trades that were long dollar, short bonds, long NASDAQ, long Bitcoin, they're all kind of getting taken out and being shot. But Bitcoin now is part of those institutional momentum trades. And it feels like it's suffering in line with that. So you kind of just have to wait. And then you get like this just big de-risking, and it's this what I call grossing down of risk. You have all these VAR shocks. Obviously, we saw like the Bund blow up, and German bonds and European bond markets blowing up a bit last week. So you've had all these kind of VAR shocks where everyone's needing to take down risk, and now because the institutions are more involved in the space, Bitcoin becomes part of that risk trade. That's all getting taken down at the same time, and it just needs to play it through, and then new momentum trades start to get established, and then we can all lever up, and then we can all start enjoying things again. So that's kind of how I see this playing out. But yeah, and you look for these opportunities. What are your thoughts? Obviously, I mean, like, the irony for me, and I'm sure for you, having been in this space a long time, is, if you had said to me 2 years ago, we'll have a strategic Bitcoin reserve or even a discussion around it, I would have said you're crazy. But we've had all that news last week. And obviously, I think markets, maybe a little bit buy rumor, sell the fact type thing, but also distracted by the broader market. But what's your take on what went down last week? What are your thoughts around that and what it means? Love to get your take on that.
So I was invited on ABC News to talk about the Bitcoin strategic reserve and the digital asset stockpile. I think that, and this is my personal opinion, again, I did vote for Trump because I said I was going to vote for a pro-crypto president because my livelihood depends on that. If I'm able to earn, I'm able to take good care of my daughter, I'm able to take good care of my community, I donate to some nonprofits, and I help with that. And I can't take care of my family if I'm not able to earn. And moving out of the country would be like devastating to my kids. I voted for support a pro-crypto president, a single issue voter, regardless of if I'm a woman or not. But anyways, but the thing is like President Trump he when it comes to crypto, I'm not talking about the other geopolitical issues, I'm not talking about the tariffs, not talking about all kinds of stuff. When it comes to crypto, he delegated those tasks to people that were smarter than him. He's a good businessman in that aspect, and it made sense for him to do it. So he got all these executive orders. He has people that are running the game now that are making good on the promises. And a lot of people forget that the SEC has an open they want to have an open dialogue with people. And I've been telling people, demand respectfully that they remove the accredited investor law. And if you're watching overseas, in America, if you don't make $250,000 per year or have over $1 million in assets, you don't get access to the same products and services traditional finance gets, and it's incredibly predatory. And it creates a lot of issues, a wealth gap. Well, we don't like that because crypto is for the people, by the people, and everyone should be able to participate. So with people are pissed about it, but I don't understand why. All the Bitcoin that has been confiscated from people doing bad things, they're not selling it because I believe David Sachs said we missed out on like $17 billion or again, don't quote me on that, but we missed out on billions and billions of dollars. So instead of just selling it, they're going to hold on to it and see what happens. And then all the crypto assets that they've seized, they have the digital asset stockpile. I personally see once we get some of the altcoins made into spot ETFs, I see those being held as in some sort of digital asset stockpile because it has a lot more backing from TradFi. And again, I think TradFi is a big circle jerk, excuse my language, and just money goes back and forth. And it's just kind of like this big Ponzi, but crypto makes it accessible to everyone. And I see them adding some of those types of products eventually, but I think it's too early now. I could be 100% wrong, but I'm happy with what happened, especially because we're not using taxpayer dollars to buy this asset. We're not printing money to buy a finite asset like Strategy is doing, and that gets a little bit scary, So I'm happy with it. I know people are pissed at the market, but again, I learned that if you're going to be in crypto, you have to be able to pivot, but you also have to be able to be patient.
Yeah. Have you got any thoughts? I mean, on that, they said any future purchases would be budget neutral. Any kind of thoughts what that might look like? I hear a lot of talk about potentially revaluing gold, selling some of the gold to buy Bitcoin.
Well, we have to do an audit on Fort Knox and see what we actually have because we don't really know what we have. They need to do an audit on the Bitcoin and crypto confiscated. They need to do an audit on Fort Knox. Like a lot of people don't understand how much trouble America's in. Like our Social Security office, or like the main headquarters is like some bottom of a mine or something ridiculous. Like they can't account for a lot of money, and it's really, really scary because we pay a lot in taxpayer dollars. So I think people need to take a step back. We need to be grateful for what we have, and we need to kind of focus on change ourselves. And people forget America is a democracy, so we have the power to write to our representatives or to run for office and do things and make change. And people just need to stop being lazy.
Yeah, for sure. I mean, one of the other things as well, we talk about. I mean, I've been talking a long time about like this institutional adoption story, and now obviously we have an administration in the US which is crypto friendly. It's definitely removed the career risk from kind of starting to build a business in this space. But I have been making the point to a few people because everyone's like, where's the adoption? Where's the adoption? Well, we still haven't got a regulatory framework yet. So right. Even and clients that I talk to will say, yeah, like we know we need to build a business in this space. We're starting to, kind of get things in place. However, particularly some of these traditional financial businesses, we can't really enter it until we know what the rules of the game are, right, and what that looks like. So it still feels like we've got some time for that to play out. I mean, on that side, what is it you'd be looking for and want to see out of from a regulatory side of things?
I definitely want the removal of the accredited investor law. I think it's predatory. I think like America is known for our social issues because we're we're just super, super diverse, and that's going to happen. But at the same time, like if you give people the ability to get to access wealth, they can afford better products and services, and a lot of the social issues go away, and a lot of the problems go away. And I think that it's just one of the most predatory laws ever. Like it just because somebody has access to money doesn't mean they're smart. I know a lot of stupid people that have money, and when I worked in corporate America, a lot of people that got positions had no business having those positions regardless of their education. They were horrible people and they just weren't good at what they did. And again, like, I don't shame anybody for having money. I think it's absolutely amazing people are able to be successful, but you shouldn't be judged on your wealth for your intelligence. For example, music men, musicians, artists, some of the most talented people in the world, their minds work differently though. So people shouldn't be judged for that. So I think that you should be able to not take any of the series tests because those are just ridiculous. You're gonna study for that. Those don't even apply to basic investing. You're gonna just go on Investopedia and learn about. I'm being serious. You don't need it. Like, nobody needs to know. Like, you don't need to know what a lot of that stuff is. And I mean, if they have. I mean, in poor neighborhoods, like by my mom's house, there's two gas stations and a liquor store within, like, on a corner, and you can buy alcohol and cigarettes, and you can buy lottery tickets and scratchers and do all that type of stuff. Like, so if you can gamble so close to your home, then why can't you be able to do it from the comfort of your own home, with something that actually might make you successful later on? Or inspiring.
No, I completely agree. It's like, I mean, particularly when you compare to gambling and the fact that, you know, that anyone can kind of do that, and yet something that, particularly when you and I and others are like, we're looking at, I look at Bitcoin particularly as, you know, it's probably one of the greatest investment opportunities I've seen in my career. Yeah, it's outperformed any other macro asset for 10 of the last 13 years, and yet they're kind of going to, well, you know, unless you're that accredited investor, you can't really, you know, partake in this and be a part of it. It just seems a little bit, you know, let people decide and give people judgment.
Yeah, I mean, obviously I want to see, like, set guidelines so companies can actually operate, but at the same time, I want them to also be able, like include the little guy, because a lot of these little guys are not going to get involved because of the accredited investor law. They're not going to start small businesses. They're not going to have access. They're just going to get so discouraged. They're not even going to look up DeFi. They're not even going to figure out how to operate in that economy because they're just like, oh, I can't do it because I'm too stupid and poor. And I think it's ridiculous. So to me, I feel like that at the bare minimum, that should be done. But I also would like to just see, you know, I want to get rules. Like, and again, I sat down and I talked to Hester Peirce, and she's like, do not sacrifice your liberty and your privacy for rules. Like, don't rush these things. And I appreciate that. And I think that a lot of people forget that we've came so far in this space in such a small period of time, but we're not done yet. And things kind of have to take their course, and we need to advocate. We need to vote for people who represent our best interests and whatnot. So I don't know. I'm very excited to see change happen in America. I just hope that we don't lose focus on what Bitcoin was created for. It was created for the underdogs by the people. It was created out of the 2008 housing crash, which was a horrible time. I know so many people who lost their homes, neighbors, family, friends, my father-in-law. It was just a devastating time for America. And Bitcoin was created so we don't have to use the banks. We don't have to use these predatory third parties if we don't want to.
Yeah, and I think it's a good point as well. And particularly, I mean, the irony for me now, and saying about feeling comfortable in this sell-off, which is quite a normal kind of sell-off.
Yeah.
I think Besson last week said, first thing we do is we stop selling the Bitcoin, and then we work out how we can purchase more. And I'm sat there speaking to friends and family and saying, look, they're telling you that they're probably going to be buying. They're going to be buying at some point. And
well, BlackRock put out a report like 6 months ago on Bitcoin. They says it's a good hedge against geopolitical issues. It's a hedge against inflation. It's like all these things. Like BlackRock told you exactly what they were doing. So
yeah. So it's like, it's one of those that I don't think you even need hindsight to kind of go, oh, do you know what, all the signs are there to be and the opportunities there to get involved. So I hope, again, like with all the education myself, you and others are putting out there, I hope people are just at least kind of educating themselves on it and looking around it. On the trading side, Wendy, what's your trading style? How do you analyze markets, and what does that look like?
I don't do a whole lot of trading anymore. I used to. I was doing a lot of leverage before, like lower leverage. I was, scalping and day trading, or longer term swing trade, all different types of stuff. Like that's what I was doing. But now it's just a lot less. It's just kind of like buying quality projects and then holding on to them long term and taking profit. I did dabble in meme coins for a little bit. And I really like to preach the moon bag strategy to my audience, but I'm just more of a longer term holder with when it comes to Bitcoin. Like I own XRP and Solana and Ethereum and a lot of the other stuff, but I probably, depending on what happens this cycle, I will probably be completely rebalancing my portfolio outside of Bitcoin and reanalyzing what assets I want to have and have more of a, a little bit more of a lenient approach, just because, trading, it's hard. It's really, really hard. And with the amount of content I do every day, I can't trade like I used to.
Yeah. And so very much kind of high quality alts and Bitcoin, that kind of stuff.
Yeah, but I am actively taking profit on this stuff. Like with Ethereum and Solana, no. Like I have a 4-tier system that I like to talk about to my audience. Tier 1 is Bitcoin. It's an asset that you believe that you can, like a house, that you can pass down to your family. Then there's tier 2, which is maybe like the top 100 coins, or just maybe Bitcoin, Ethereum, Solana, or excuse me, like Ethereum, Solana, XRP. I don't know. Just for example, stuff that you might not want to take profit on for 5 years or the cycle or whatever. But if you can, it's good to take a little bit of profit. Then tier 3, which is going to be the top 1,000. Those types of things, and you're going to be more aggressively taking profit. Tier 4 is the complete shitters, where you want to aggressively take profit and make moon bags. Like when you start to get up like 2-3 times, you want to move initial investment, profit enough for taxes. A moon bag is when you do due diligence, you decide to invest in an disposable income into an asset that you've decided to do, not because somebody else told you to. You remove enough for profit and initial investment and enough to pay taxes, and then you rinse and repeat, and you just keep cycling. That's kind of my strategy. And I kind of, in my trading and investing journal, analyze what tier it is and that type of stuff. But it's holding and doing longer term swing trades has been a little bit better.
Yeah, for sure. Yeah. And I mean, I actually think like the taking profit is probably like the hardest thing. I mean, again, I'm
always, it's always the hardest.
Yeah. And it's kind of being comfortable with the idea that if you take profit early and that coin continues to go, then
that's why you make a moon bag. Because if you have a moon bag, you have whatever you have left over free and clear as part of your moon bag. And I remember DeFi summer, I was printing like crazy. Like I would buy these random things and they would just keep going and going. So I would make my moon bag and I would just pull money out. And then eventually the thing would die. But it's a good strategy. I did really well. And I hope we have a similar cycle like that.
Yeah, and do you still confident we're gonna see an alt season? And
I hope
so we have this correction. So what do you look at? Like you said, like 75K in Bitcoin, which is seems to be like the kind of levels that most people are talking about now, which sometimes makes you think we don't actually get there. Like
I mean, I don't need. I'm gonna just look at the chart really quick and see where are this moment. But I mean, I don't see. I mean, I hope. Like, I want Bitcoin to dump. Like right now, we tapped at about 77,000. And it looks like we might fall to like 73. That's kind of this chart that I have. And we broke down, but where does this resistance come from? Is this from the weekly or the support? I'm sorry. I don't know why I put that line there. I don't know. Who knows? I would have to go back and look. But it does look like, unless we're able to hold on to 79 or 78, it does look like we're going to go down. And I mean, I do hope we have an altcoin season. I feel like we are in a super cycle, but it's just, this is a brand new territory we're in with all the adoption happening on a grand scale.
Yeah, for sure. And so are there any kind of specific triggers that you're looking at, or is just, this is just how the cycles play out?
Honestly, I've learned that like there's so many different things that you can use to predict the markets. You can use technical analysis, you can use fundamental analysis, you can use all of these little caveated experiences. And I just think that I just like to look at the market daily. I like to have a trading and investing plan, and I like to pivot when I need to pivot and just kind of enjoy the cycle. Like right now, I really cover a lot of news and do a lot of education on my socials as far as media. So I like to focus on that and just kind of be a holder right now and not have to worry about over trading and whatnot.
Yeah. And how do you, yeah, for sure. And how do you deal with, obviously given some of your focus around the retail stuff, like there must be a lot of stressed out folks right now that are kind of reaching out to you. What are your words of comfort for them in these markets?
I tell them, if you've made a mistake, you need to take a step back and reanalyze what you've done. You should have a trading and investing journal if you don't, and go on Investopedia and spend 10 to 15 minutes a day reading. And I mean, I tell my audience too, a lot of you should be paper trading. If you're not a profitable paper trader, you have no business at all trading at all. But I mean, and I tell them, if, like, let's say, for example, you like XRP and you think that's the next Bitcoin or whatever, I highly recommend to just dollar cost average in things you have high conviction in and have an entry and exit strategy. Everybody does, even with the 401k. Everyone knows they're cashing their 401ks out at like 70 or whatever. And the same should be applied to crypto. Like, you have to have an entry and exit.
Yeah, for sure. And it's funny as well, Wendy, just speaking to you, we had David Gockstein on here the other week, and it feels like anyone who has now seen a few cycles, like, everyone's just pretty relaxed. Like, it's it's like there's so much noise, right?
Yeah, I mean, there's like the SEC dropped so many cases against all these crypto companies, and like Bitcoin is like accepted in America now. It's kind of a big deal. So I don't know. I'm not stressed. I'm not worried. Like, and also too, there's so many opportunities to work in the space. Like, you don't have to be a trader. Like, you can go work for a company. You can do marketing. You could do accounting. You can do legal. You can do go to market. Like, there's so many things you could do that you can make money in crypto. So figure out what you're good at and do it.
Yeah, and it's still very early as well, right? I mean, it really is.
I do. I think it is. I know that it's like kind of jaded. We say that all the time. Yeah. But I still think there's a lot of opportunities. America's just getting started.
Yeah. Well, I think that's probably a positive note to end the conversation on. Yeah, we're all relaxed here, so we'll keep buying those dips and positioning for the long term.
I agree. Thank you for having me.
Thanks, Wendy. Thanks for coming on. Really appreciate it. Really good to meet you and talk to you. Thank you.
Thank you.
Cool. So another old hand at the crypto market saying that this is run of the mill.
Yeah,
right?
and it's interesting, right? Like we had like David Gockstein on the other week. I think anyone who's seen a few of these cycles now is just kind of like whatever, like quite kind of relaxed.
Yeah.
I thought it was interesting, like the points that Wendy made around, like. And it's probably why Trump's come into power, right? How actually, like, a lot of people in the US are struggling.
Mm-hmm.
So the numbers and growth numbers and that probably mask like an underlying weakness that's been like prevalent in that economy for some time. And so if you compare to like 2021 and they were handing out stimmies and all that sort of stuff, and people actually had some cash, we're not in that situation right now. And I thought the point she made around, perhaps that's a big part of why altcoins aren't performing so much. And this has been very much an institutional story.
Mm-hmm.
Was quite interesting. But I guess the flip side is if Trump does have some success in kind of helping Main Street a bit more,
mm-hmm.
then all of a sudden that becomes a more positive story. But
it's a bit of a longer term story, though.
It's a longer term story,
yeah.
and I think the point that Wendy made and I made is like stepping back from all of that. This is still very much a very normal Bitcoin cycle, with a very normal correction after a big move. So 30% correction, fine. It's like it's probably the start of something.
Yeah, I mean, look, 70K, low 70s is the obvious place for a bounce here in Bitcoin. Yep. If it breaks that, then who knows? Like then 54, I believe, is a very big level as well. But yeah, I think the next month, 6 weeks, 4 to 6 weeks, is going to be very interesting because we're going to be kind of trying to, figure out whether we're putting in a low or not, basically, right? So I think it's super, super interesting time.
And my time frames would actually be shorter. I think we see this deleveraging. Is it done this week? Maybe not. Maybe it runs a bit longer. But I think that's when you'll see the bottom be pull in and things start to move higher.
Well, I'm probably buying some medium-term call spreads, call ratios if we hit 72K.
Probably the way to do it, yeah.
Yeah.
What if we don't? What if we bottomed?
What if we bottomed?
Yeah.
Well, I'm already long, right? So if we bottomed, I'm long. I just didn't get to add much.
Okay,
right?
yeah.
Yeah. So, all right, guys, that is it for this week. Remember, like and subscribe, and we'll catch you here again next week. Cheers.